Chris, thanks for joining me to talk a little bit about how the recent tax reform will affect businesses. There's been a lot in the news about the Tax Cuts and Jobs Act. What's the general purpose of the act?
Yeah, the general purpose of the act is to simplify the tax code and to lower taxes for businesses.
How have the tax rates changed for businesses?
The corporate tax structure has changed from a graduated rate system to a new flat tax of 21%. For taxpayers that have income from partnerships, S corporations, or sole proprietorships, their tax rates are generally going to be less than what they were in prior years, and their maximum tax rate has dropped from 39 to 37.6%.
How has the act tried to keep taxation equitable between corporations and flow-through entities?
Yeah, so there's a new qualified business income deduction. So taxpayers who are receiving income from partnerships, S corporations, and sole proprietorships are generally allowed a deduction of 20% of their taxable income. There are certain income thresholds that if the taxable income of taxpayers exceeds, they may not receive a deduction, and there are also limitations on the types of businesses. Certain service businesses such as healthcare, law, accounting, consulting, financial services may receive limited or no deductions.
In what ways has the tax code been simplified?
Yeah, the Act makes it easier for businesses to keep their books and records. So for taxpayers who meet certain gross receipts thresholds, you may now use the cash method of accounting. You no longer need to maintain inventory. And certain taxpayers in the past have had to capitalize indirect costs to inventory. And if you are meeting, again, certain thresholds, you may no longer need to do that.
Were there changes that negatively impacted businesses?
Yeah, the Act did change deductions that were previously available to businesses. Deductions for interest expense and the use of net operating losses are now limited. Deductions such as the domestic production activities deduction, transportation expenses, and some entertainment expenses are now eliminated.
Has the Act changed the way in which tangible personal property is expensed or depreciated?
Yeah, so the Act increases the Section 179 deduction to $1 million. The Act also expands the definition of the type of property that can be expensed. So improvements to commercial property such as roofs, HVAC systems, fire and security systems are now considered eligible property for the expensing.
Chris, what's the final takeaway on how the Act will impact businesses?
It's going to vary depending on the type of business. There are some nice changes to the Tax Act, such as the lower tax rates. On the other hand, some businesses will lose out on deductions that were previously available to them. I think it's important for businesses to be proactive in their planning and working with their accountants to determine how the Tax Act is going to impact them.
Chris, thank you. Great information. If you have further questions, please feel free to contact our office.